Hey everyone, welcome back to the channel. Today, we're diving into 5 powerful dividend stocks that could literally make you rich over the next decade, if you play your cards right. We're talking about companies with rock-solid balance sheets, growing dividends, and business models built to last: Chevron, CVX, Procter Gamble, PG, Johnson & Johnson, J&J, Home Depot, HD, and PepsiCo, PP. If you're serious about building long-term wealth through dividends, grab your notebook, because this video is packed with insights you won't want to miss. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Before we get into each stock, let's understand why dividend stocks are the cornerstone of wealth building. Over time, dividends provide steady cash flow, and when reinvested, they create a compounding effect that accelerates your returns. For instance, if you invested in Procter & Gamble 20 years ago, and simply reinvested every dividend, your total returns would be more than double those who didn't. It's not about chasing hype or quick profits, it's about owning stable, income-generating businesses that grow even through recessions. Alright, let's get into the first stock, Chevron. Chevron, ticker symbol, CVX, is one of the world's largest integrated energy companies. Despite all the noise about clean energy transitions, Chevron continues to generate massive free cash flow. Why it stands out: the dividend yield stands at approximately 4%. This yield reflects the company's commitment to delivering value to its shareholders, promoting a sustainable growth strategy, and reinforcing its financial stability in a competitive market. Investors can anticipate consistent returns through this attractive dividend offering. Dividend growth streak: 36 consecutive years. Payout ratio: around 45%, leaving plenty of room for increases. Chevron benefits from its low-cost production and disciplined capital spending. And while oil prices fluctuate, Chevron's diversification and cost management keep it profitable even during downturns. In the next decade, energy demand will remain strong, especially in developing countries. That positions Chevron as both a steady income play and a long-term growth opportunity. If you're a dividend investor, CVX is like the anchor in your portfolio: reliable, high-yielding, and built to last. Next up, we have Procter & Gamble, the legendary consumer goods company behind brands like Tide, Pampers, Gillette, and Crest. PG is the textbook definition of a dividend king, with over 68 consecutive years of dividend increases. Why investors love PG: the yield is attractive. 2.5%. In the current financial landscape, a dividend yield of around 2.5% offers investors a promising return, providing consistent income, while also hinting at the potential for capital appreciation in the future. This makes it a worthwhile consideration for those looking to balance risk and reward. Steady earnings from everyday essentials. Inflation resilience: consumers keep buying their products regardless of the economy. What makes P&G powerful isn't just its dividend, it's its ability to raise prices without losing customers. That's pricing power, and it's the secret ingredient of wealth-building stocks. In a decade, PG might not double overnight, but its slow, steady growth and reinvested dividends can build serious long-term wealth. Now let's talk about one of the most stable and trusted companies in the world, Johnson & Johnson. Even with recent challenges and legal headlines, J&J remains a dividend powerhouse with over 60 consecutive years of increases. Key strengths: operates in 3 major areas: pharmaceuticals, medical devices, and consumer health. The yield of 3.3% is quite attractive. This yield can provide a steady income for investors looking to earn returns from their investments without relying solely on capital appreciation. It can also indicate a company's financial health and stability, making it an appealing option in uncertain markets. AAA credit rating, yes, even higher than the US government. Healthcare is a sector that's not going away. Populations are aging, healthcare demand is growing, and J&J's innovation pipeline remains strong. By owning J&J, you're not just investing in a stock, you're investing in a global healthcare ecosystem that pays you to stay invested. Home Depot is one of the best performing retail stocks of all time. It turned thousands of investors into millionaires, and it's not done yet. Dividend stats, yield is approximately 2.4%. In financial terms, a yield of 2.4% can indicate the return expected on an investment, often calculated as the annual income divided by the investment's cost. Understanding yields is vital for making informed decisions in various markets. 14+ years of dividend growth. Average dividend growth rate, 15% per year over the last decade. Home Depot's business model is simple: serve homeowners and contractors who always need to fix, upgrade, or build something. Even during economic slowdowns, HD maintains strong sales thanks to the massive US housing base. If you believe housing demand will remain steady and home improvement will always matter, Home Depot is a must-own dividend stock for long-term compounding. And finally, PepsiCo. This company is much more than soda, it's a global snack empire with brands like Lay's, Doritos, and Gatorade. Dividend details: yield currently stands at approximately 2.9%. This yield reflects the market conditions and interest rates influencing investment strategies, guiding investors toward potential opportunities and risks. Understanding these factors can help in making informed financial decisions that align with individual goals and market performance. 52 consecutive years of dividend growth. Consistent, double-digit total return performance. Pepsi's real edge. Diversification. It's not just drinks, it's snacks, energy beverages, and even healthier product lines that meet consumer demand trends. Pepsi's steady revenue growth and global presence make it one of the most reliable compounding machines in the market. So let's recap. CVX gives you energy income and strong yield. PG brings stability and pricing power. J&J anchors your portfolio with healthcare. HD offers high dividend growth potential. PEP provides global diversification and consistent returns. Together, these 5 dividend giants create a balanced, income-generating portfolio across multiple sectors: energy, consumer goods, healthcare, retail, and food and beverage. If you reinvest dividends, stay patient, and hold these companies through market cycles, you could build massive wealth over the next decade. Thanks for watching. If you enjoyed this breakdown, make sure to hit like, subscribe, and turn on notifications, and let me know in the comments which dividend stock you're adding to your portfolio next.